Hello YouTubers and welcome to my channel. This is the Prince of Forex, and in this channel I'll be teaching you how to place trade like a professional trader, and in everything you do you have to think like a professional trader in this channel. And in my last 3 videos I talked about marking out key price level, and that was the first thing. And I told you that the institutional traders, how they trade is they look for what is cheap, levels that are cheap in value, and they buy. If it's not cheap, they are not buying. They only buy things when they are cheap. So I have a question for everybody out there, and I want you to listen. Why do we treat trading in a different way when it comes down to the digital space? But in real life, when you're out there to buy a fridge or a clothes, you have to check your pocket if you have money. So we don't use trend lines in our day-to-day life. We don't go out there. I want to buy a toy for my kids, and you start checking for trend lines and Fibonacci series before you buy. You don't do that in real life, right? So why do you bring it down in trading? You are looking for Elliott waves. You are looking for RSI. You are looking for Fibonacci series bouncing up from the 50% levels. Why are you doing that? You don't do that in your everyday life. So when you come down to the trading space, digital space, please treat it the same way. There are price levels that are cheap and they are expensive, and I've showed it to you. Stick to the channel and you'll learn more. So let's dive deep into this video. I'll be going down to the daily. We were out on we were sitting on a consensus area. I told you in the last video that the consensus was going on around here, and now the consensus is over and we are up. And now the question is, are we cheap? Yes, we are cheap, and that's why they are buying. International traders are buying massively, and they'll be buying to the next level. We have a resistance here. This is not a level, it's just a resistance, and it might break if we don't have a bad news. But if there's a bad news, it will turn away from here. This is just a resistance, not really a level, just a resistance. You can see it on the monthly time frame. It's just weak, it's not a level, but there are others there too. So if the institutional trader sees that that level is kind of important, they might sell off from there. But you have to learn how to manage your trade. So at every consensus, we want to know if we are cheap and expensive, and now the consensus is saying we are cheap and everybody is buying. So if you have this idea in mind that when I'm trading in my real life, I don't do trend lines before I make a trade or buy something in the market, you should treat do the same thing. You treat trading like that. There are some levels that are cheap, the levels that are expensive. If you are trading around here, then you should know that the zone above is expensive and the zone below is cheap. That's how to trade. Now if this zone is being broken and we are trading above, then that means it is considered cheap now. If we close above, then this level that was expensive will become cheap, and right now this is a cheap level. And within this place we should be going upward. Now in the next video I'll be teaching you how the consensus is being carried out and the factors that are being used by institutional traders to know if a level is undervalued or overvalued, and what they are looking at fundamentally. So stick to the channel and I'll be teaching you how the consensus factors are being defined to know when an asset is undervalued or overvalued. This is the Prince of Forex, and I'll be teaching you how to become a professional trader. Thank you.